copper's hitting new all-time highs again this year, just in August of 2026, above $14,300, let's say, per ton. And that's really, on a mix of multiple things. I think there's a strong fundamental backdrop to the story where there's a strong supply deficit that we think that's going to escalate in the years to come.
All right, welcome back inside our proactive newsroom. And joining me now is Jacob White. He is Sprott Asset Management Director for ETF Product Management. And Jacob, it's great to see you again. How are you?
I'm doing well. Thank you for having me. How are you?
Yeah, I'm doing well. Thank you. Good to have you back. And it's timely we're talking to you about copper because price-wise, it's doing very well. In fact, it's doing better than we've ever seen before. So let's talk there. Pricing. What are you seeing? And this rise is what are you expecting it to go where it's gone?
Yeah, absolutely. I think some people have been surprised, but we've been on the copper bull market story for quite a while now, and so copper's hitting new all-time highs again this year, just in August of 2026, above $14,300, let's say, per ton, and that's really on a mix of multiple things. I think there's a strong fundamental backdrop to the story where there's a strong supply deficit that we think that's going to escalate in the years to come. And then there's also, more timely kind of announcements with potential copper inventory fragmentation and copper tariffs and these sorts of things really helping capitalize this metal that's really being seen as more of a strategic end use rather than, this Dr. Copper kind of narrative that has historically persisted.
Yeah, let's talk about the tariff part of it because that's something that continues to get news, although it's not really moving forward, so to speak.
Yeah, absolutely. So there was a June 30th deadline for the Trump administration to announce whether or not there would be a tariff. So, for investors, I'd like to recall that last year, Trump came out and said that there was going to be a 50% tariff on refined copper. That didn't materialize. But in the interim, there was a 30% premium in the U.S. versus in Europe and in other places in the world. And so now the Commerce Secretary's recommendation is for a 15% tariff in January 1, 2027. We don't know whether or not that's going to be happening, but what's resulting is a lot of speculation. And so there's a lot of actual copper being shipped into the U.S. and it's being taken out of the market at a time for which we're already in a supply deficit and really exacerbating things in terms of traders thinking that they may be able to get an advantageous price in the future if there is a tariff on copper.
Yeah, I know that. In fact, I've interviewed many of them that have projects within the United States, specifically copper projects and other metals as well, but mostly the copper part of it. And I know they're in a race to try and get to a point where they're producing copper and putting copper out, because as you mentioned, with the supply and demand challenge, there's going to be so much more copper needed, and these projects become of utmost importance to get them to a point they are now to where they're actually moving copper out.
Yeah, absolutely. I think that especially within the U.S. or even within friendly nations to the U.S., there's a very strong strategic push for these types of critical materials for which, copper in the recent, like say 12 months was added to the U.S. critical materials lists. And that's, includes strategic investments like the U.S. government taking a stake in an actual copper miner, increased levels of permitting because it takes on average 17 and a half years from a copper mine to go from first discovery to production. So there's a lot of different regulatory actions that are happening to help supercharge these copper miners. And you're exactly right. With this copper price at an all-time high, they're definitely incentivized from AISC margin or all-in sustaining cost margin. They've never been really more profitable. So it's really just a race in order to be able to produce these sorts of copper to these really deserving nations, especially as they want to diversify away from other regions like China that have historically, for example, produced a lot of the world's smelting capacity for copper.
Yeah. So just as we wrap up here, I know that Sprott's published a report that you did on copper. So what's sort of the main message that you're seeing in the markets today when it comes to copper? What are the key things that investors should be aware of when they start to potentially look at one of these metals?
Yeah, absolutely. So I think the thing we always start with is the fundamentals. We are in a supply deficit. Just to put that into perspective, for example, Codelco, which has historically been the world's largest miner out of Chile, the world's largest copper producer in the world in terms of a country, over the last 20 some odd years, they're production has actually declined, and yet the copper price has gone up, 7 times over that type of time frame since 2000. So it is really hard for a lot of these legacy type of copper producers to move forward. And so we think that the copper story from a supply perspective is going to remain limited and really help those copper miners that bring it into production. But then, from a demand perspective, we're seeing only increased investment in terms of electricity grids, in terms of AI, in terms of defense needs. All of these sorts of things are kind of culminating in a strategic end use for copper that we think is going to propel it forward.
All right. Well, we'll keep an eye on it for sure. I know you will. Jacob, thanks so much. Great to see you again and appreciate your time.
Thank you for having me.
All right. There's Jacob White, Sprott Asset Management Director, ETF Product Management at Sprott.